Next guest, bullish on names like NVIDIA, Microsoft, and CrowdStrike, just to name a few. Of course, a lot of these names have already been on quite a streak. Joining us right now with Paul Meeks, veteran tech investor and professor of the Baker School of Business at the Citadel. Good morning to you. Paul, as I just mentioned, a number of the stocks that you like have already been on the move, and I think there's a lot of folks out there saying, how much more can they move?
Well, the way I look at this, Andrew, is yes, so far the NASDAQ is up 41% year to date. I expect tech to outperform the S&P again next year, but not by this magnitude. But I'm very confident, particularly with rates, 40% chance, according to Fed futures contracts, that rates will start to fall in March. Higher probability, about 2/3 in the May timeframe. But with that backdrop and the level of rates for the valuation of tech stocks is even more important than all the buzz around AI. I think it is a fairly constructive setup. But of course, you can't expect to have gains like we're going to have in 2023.
You mentioned AI, and I'm curious where you land here. Clearly, NVIDIA, some of the hardware makers, are the beneficiaries on an economic basis today. There's always been the question of whether the software makers are going to benefit in the same way, or whether AI unto itself becomes a commodity, a feature of all of these software platforms, if you will, and how much you can actually benefit on a margin basis from that, as opposed to just maybe capturing share here or there for those who sort of win for the moment until the next one catches up and overtakes them.
Andrew, that's an excellent question. So the way I look at this rollout of AI, so far we have been building and training the large language models, and that's squarely in the favor of the hardware and semiconductor companies. And obviously, NVIDIA has been the standard bearer. I actually think that we'll have another predominantly focused year on AI large language model training. And so I know it sounds not particularly creative, but I expect the same old, because we're not going to even get to inference of these models, which is the next stage in AI development, probably until 25. And then we don't really get the release of the AI applications until maybe even later. And so as of now, we're going to continue to need a ton of computer horsepower to train these large language models. And so I think the AI outperformers continue to be in 24, the same crew that dominated in 23. And even though the stock is triple, NVIDIA is my favorite name going into next year.
So then just tell me how you think about the software players, though. The Microsofts of the world partnered, obviously, with OpenAI. Amazon's now trying to get into this space. Google, clearly. I mean, again, do you think that they are going to somehow collect share in a different way, be able to capture margin in a different way, that there's going to be a moment at which big enterprises are going to say, you know what, actually, we're going to invest a lot more in software, and we're willing to spend XXX more because, frankly, the costs are going to come down, we'll be that much more productive, we're going to have less employees. I mean, when do you think that sea change, if there is a sea change, happens?
So the tell for the potential success of AI-driven software apps will be next year when we continue to see if Microsoft has greater penetration of its Office 365 subscriber base with the Copilot tool, right? They are now charging about $15, $16 a month for Office 365. They want to add a $30 per month add-on with AI. And if people bite, and of course, that'll be very high, almost 100% gross margin incremental revenues. If the subscribers bite, we'll have a tell that this is the real deal. If they don't, then I really worry, just as you said, Andrew, that these apps might become ubiquitous over time, but they also may not be particularly profitable. We saw the same thing with the internet. A couple of major stars, huge market cap companies today came out of that, but a lot of them, you end up having broadband internet connections everywhere, and it becomes ubiquitous, it becomes commoditized, and most people don't make any dough doing it. So I am worried about that.
Hey, Paul, on the other side, I think a lot of people look to you as someone who spent a lot of time figuring out what's going to work in tech. What's not going to work in tech? Meaning there's a whole bunch of folks who basically bought the Magnificent Seven. They're holding it. They're sitting there and they're crossing their fingers. Are there names on that list or other names that you say, you know what, in this new world, it may not work out?
Yeah, well, the thing that I'll think about, let's talk about the Magnificent Seven, where everybody is laser beam focused. Out of the Magnificent Seven, and I've been doing this a long time, I really only like 3 or 4. So I'm actually cautious on some. I'm a little bit worried these days about Alphabet's legal issues. I think Apple, prospectively, will not grow at the rate that people expect. And, it's very expensive with a $3 trillion market cap. The ones that I like are Meta, Microsoft, and NVIDIA. And NVIDIA is in the pole position in my race. And so, yes, you've seen in the last week some actually poor quarters and disappointing guidance from some big companies a la Adobe and Oracle. And so I do think we'll have a little bit of differentiation between the greats and the not so greats in tech next year. Whereas so far this year, particularly in the fall of 2023, the tide has lifted all boats. I don't think that'll be the same for next year.
Okay, final question, because we hadn't really talked about it. Tesla, where do you sit? Where do you stand?
Yeah, I'm not a fan. I think there are so many ifs, greater competition. I also think, the stock is really held up by the Elon Musk halo, and unrelated to Tesla, the travesty which has become the former Twitter, now X. Now, once we knock off that halo, because I think that company may not make it over time, that's actually going to have people look differently and value Tesla differently, because obviously right now it's a cult of one-man stock.